In today's video, I'm going to teach you guys on the basics of forex trading. And they are found that most of you guys that watch my videos are beginners and you don't even know what forex trading is. So that's why today's video I've decided to make it all about the basics of forex trading. Now, World on YouTube is Black AFS, and in today's video I'm going to teach you guys on the basics of forex trading. Now, for my research, based on the fact that I've been posting videos here and there, I found out that most of you guys that watch my videos are beginners and you don't even know what forex trading is. So that's why today's video I've decided to make it all about the basics of forex trading. Now, the first question is going to be, what is forex trading? Because there are many types of trading. There are crypto trading, NFT trading, stock options trading, and different types of trading. But today's topic is going to be, what is forex trading? Now, forex trading is simply the simultaneous buying and selling of two currencies or more. Now, you might be thinking, well, isn't that carried out by the big banks and the hedge funds and the elites in the world? How can somebody like me, a nobody, trade in the forex market that is occupied by the big dogs? Now, and what if I told you that you were correct for most of the aspects of what you just thought of or said, but recently, over the past, let's say 20 years, there have been recent developments, recent companies and apps that have been brought out, technologies that have enabled us retail traders to trade in the forex market without huge capital like the big banks and the hedge funds. And those companies and technologies are called brokers, forex brokers, not just any broker. Now, what do forex brokers do? They are just an app where you can place trade, we all know. But how do they allow us to trade in the forex market? That is where leverage comes in. Now, leverage is just like a loan that is given to you by the broker to place a significant trade based on the units that you have ordered or you have placed a trade on. Before I dive deep into leverage, let me just clarify what I mean. Imagine you wanted to buy a shoe, and in Nigerian naira it costs 500,000 naira, but in the US dollar it costs $10,000, and you want to buy the one that is in the US. Then, as you have only $500, what you can do is to meet somebody that can lend you the remaining amounts to buy the shoe from the UK. Then when you resell it, they will take their own portion out and their own profits, and you will still give them the amount that they borrowed you. So that's the same thing with brokers. They just lend you money, which is leverage, to place a trade by adding your little capital. While placing the trades, then you are able to do what you want to do. But your mind might be, why would somebody just wake up one day and say, okay, I want to enable traders to trade in the market? Why? Is that how good somebody is? Well, the answer is no. They actually make money from our trades, even if you don't know. Maybe you must have noticed that, okay, you place an order here, but it did not execute where you place the order, even if your broker has fast executions. But those space that is given between your order side and where it's being executed is called a spread. Now, why are these spreads? You know, nobody can just give you something for free. If it's me, I created the broker, I'm the first person to create a broker, I will still want a way to make profits from it. So I will eventually create spreads. And those spreads enables them to make money from the little loss that your account will incur immediately you place the order. So that is what the spread is all about, and that is how they make their money. Now you might be thinking, okay, now we know how to trade, we know how to place trades, we know what forex trading is, but how do we know how to make money from forex trading? Because you can't just open the market and start placing buys and sells anyhow, because the market is random. It can do whatever it wants to do. You might place a sell now, and the next minute the green candlestick has shoot up and you have lost money. But there are ways you know how to analyze the charts and know when to buy and when to sell. Now you might be asking, wow, what are charts? In about 100 years ago, there was forex trading, though not like there wasn't forex trading. There was forex trading, people were trading forex, but there was no valid way to analyze the charts. The only way they traded forex was just the interest rate. That's the only place that they made their profits from, which is the interest rate between two currencies that they are trading, and they only trade to get the other currency. And you cannot buy what you don't have to sell. You cannot sell what you don't have to buy. If you have dollar, the only way you can sell dollar is by having dollar. The only way you can sell naira is by having naira. But in the forex market of now, you cannot depend on that. You can actually sell naira when you don't have naira. Just place the bets on what you think is going to happen in the market. Now, as I was saying, about 100 years ago, there was no way to analyze the charts until the Japanese candlestick was created. I don't know who created it though, but it has benefited us forex traders in the long run. Now, those candlesticks are candlesticks like body that are created on a platform or a body or a white surface or black surface, anything that goes for you. I like using black though in my charts. They are being created to identify what market is doing over a period of time. It can show what the market has done, what the market is doing, and what the market is going to do in the future because of what it has shown in the past. Those candlesticks were just random things that people were using to analyze the chart, but they found that there's an issue. Those candlesticks which are the bullish, which is green, and the bearish, which is red, is not still enough for you to determine when you buy or when you sell. So they had to go back into years when the candlestick was being created, and they studied it and they found that there have been patterns that the chart has been creating, which is the candlestick. They have been creating those patterns over and over and over, and when they create those patterns, anytime those patterns are being created, they tend to repeat themselves. Okay, they thought, okay, what do we do? Okay, since these are what is happening, let's try and observe it in real time data. So they went to the present and understood that these patterns really work, and they will always continue to work as long as the candlesticks print themselves on the chart. So they decided to use those as solid trading strategies to know when to buy and when to sell. So that's when the whole concept of trading strategies came out from. From there, they gave birth to different strategies, but the main one are those patterns that are being created every time when the market is live. Now you might be wondering, how do we know those patterns? There are many more that I can mention for, which is double top, double bottom, rising wedge, falling wedge, and many more. They even have the candlesticks signs and patterns, which means a particular candlestick or a body of candlesticks, what those bodies of candlesticks are showing you for a period of time can still be used as patterns. They have the hammer, the shooting star, the falling star, different types. I can't mention, I don't even give a shit about those ones because the strategy I use is different from that aspect, and that might be in the next video. But today, now I'm sure if you run through everything I've said in the past 6 minutes, is that I've taught you guys what forex trading is. I've taught you guys how forex trading is being placed and how you can place a trade in the forex market. I've showed you guys how the forex market is being analyzed if you are a newbie, and I've still showed you guys why it is safe to trade forex and why the brokers are not stealing your money, except for the scammers one. But the one that I'll refer to you guys, which I use, is Xness. And for the record, I am not being paid to say what I'm saying, but Xness broker is one of the best brokers that I've used. I've used Quackle, I've used Xness, but maybe you might prefer Quackle markets, but I prefer Xness. Since I'm a Nigerian, I love their local balance transfer, and I'm able to easily withdraw my profit. If you go back to my YouTube shorts or the post I posted earlier today, which is I don't know what today's though, but I don't know today's date, but the video I posted, the last post I posted, I just showed you guys my insane entries, how I get insane entries. If you watch video, it was live. I screen recorded that video to show you guys my insane entries and how I can enter the markets and gather a high risk to reward ratio. So that's, by the way, if you want to watch that video is in my channel. Just when you get to my channel, remember to subscribe, hit the notification bell, so that anytime I drop a banger video like this, you'll be the first to know. So back into what we're talking about. So after those 100 years of the candlestick charts being created, people have derived their other patterns. They have derived ways to trade in the forex market, and those ways are proving very, very effective to whoever adopts that pattern. But if a very, very famous theory, I don't know if it's a theory or a myth or whatever, that been said in the forex market, that every strategy works, and I believe that every strategy works. It's just for you to find the one that is resonating with your personality. Like I said in the last video, it all boils down to personality. You have to be that kind of person that will like that kind of strategy. I used to trade the basic double top, double bottom, rising wedge, falling wedge, trend line breakouts, and support and resistance breakout, but they were too basic for me. I like doing things complex. Maybe just my person, people might not like that, but whoever likes it, just follow me so that we can learn my strategy together. But I like complex things, and that kind of complexity was not easy to learn, but I learned one. There are many in the internet though, but I learned one that made me lots of profits when I learned it earlier this year, and it is called market mechanics or market dynamics. It just teaches us the basic way on how the market move, why the market move, the harsh truth on why the market move, and that harsh truth is the smart money. The big bands, the hedge funds, they are the main reason why the market move. And if you don't understand that, you will surely lose in the market. They are the whole. You can't tell me that it's a trading that when you fly to another country, you trade money. That's what is making the markets to move. No, it is the big bands, the investors, the hedge funds, the smart money that are making the market to move. But there's only one thing that they need to make the market move, which is taking us into our next topic, which is called liquidity. Now, what is liquidity? Liquidity is like a fuel for the market to move. Let's put it like this for example. If you have a car and there's no fuel in the car can't move. No matter how expensive the car is, or how big, or how valued that car is, as long as there's no fuel to move that car, the car cannot move, and the car will not move, and it will not have any reason to move because there's no fuel. So what do? You just have to buy fuel and put in the car. You just have to buy fuel and put in the car. You, the driver, might not want to buy fuel, but when the car stops on the road, the car will have to force you to buy fuel, because looking at the car, you will not like it to be the road. You have to buy fuel because the car has forced you to buy fuel. Putting this into a real forex market means the big banks, when they are placing trades with their hundreds of millions of dollars, they need somebody who's willing to place the same trade worth hundreds of millions of. So, as we're saying in the aspect of the liquidity concept, I made example of the car. Whenever the car needs fuel to move, you have to buy fuel into the car so that the car can move. So that's the same thing that applies to the aspect of the market of forex trading. Whenever there's no liquidity in the markets can't move. So the smart money, which is the big banks and the hedge funds, they have to gather liquidity because they are trading on millions of dollars, and we that are retail traders, we don't have that amount of money to trade. So what they will do, since there's nobody to fulfill their order, because if they are buying the currency worth hundreds of millions of dollars, even with the reward, there needs to be somebody that has that selling capacity to sell that amount to you, that same asset. So what they do when there's nobody like that in the market, they will trick retail traders like us into entry for the wrong position. Then they will gather the liquidity and place their ordained position. So what they do is what I'm going to show you guys in my next video. So if you want to know how I trade the liquidity concept, why not just watch out for my next video I'm releasing next week. So back into the liquidity concept. Technically, what I mean to say is that whenever they want to place a order, like a buy order, and there's nobody that has that amount to sell in the market, they will just go on a short sell move and trick traders that don't know how to predict their moves into going on a sell. Then they will reverse it. When they lose their money, that money acts as fuel and liquidity for them to enter their buy position. So whenever you see little retracement, just know that that is the act of the smart money to trick retail traders like us into entry for the wrong positions. Then they'll be able to enter for their correct positions. But most traders like me, I did not know this concept until earlier this year, when I was still losing little money, losing all my hard-earned money. So I learned from a guy on YouTube, because somebody like me, I've not had money to buy course, but for free knowledge, I've been able to understand how I'll be able to learn from YouTube. Most people don't know that there's free knowledge on YouTube. They just try to buy courses that they might not even finish, and course might not even be my thing. I might buy a course and find out that I would have learned better on free YouTube, which I'm doing for you guys. So right now I'm sharing my knowledge on what the liquidity concept is. So from everything I've said, from the example of the car, to what I'm saying now, it just means that the liquidity is the fuel for the markets to move. Without liquidity, the markets can't move, because your small, even $1,000 cannot make the market to move. It's the smart money, the banks and the hedge funds, the investors that are investing huge amounts of money that makes the market to move. So what do? We just play along and play to their tune of the music. Whenever they want to buy, we know that they are going to buy. But that's the issue now. Most people don't know when the smart money wants to buy. So that's what I'll teach you guys in my next video. So watch out, hit the subscribe button and hit the notification bell, so that anytime I drop a banger video like this, you'll be the first to know. Thank you guys for watching this video.